Hey everyone, it is Evan here from the Trade Risk on Friday, March 22nd, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So it was a busy week. It was a busy end to the week. Markets were all over the place, and we finished in the hole here with markets selling off into the lows of the week. Friday's action here right across the board of all the major indices down about 2%, IWM 3.5% to the downside here on Friday, and we're bringing those 5-day change numbers back into red territory. We're also losing some of those shorter term moving averages in the Dow, SPY, and IWM, and really the IWM is the laggard now, below the 50, below the 200, below last week's lows, so really just not a lot to like there in the short term for the Russell 2000. If we break it down by sectors, doesn't get any prettier. We essentially have a skew to the downside here with IBB, which is biotech, leading to the downside 5.28%, followed by financials and transports in the bottom three. On the top quadrant, we do have some that are still holding positive. We got discretionary, we have semiconductors, and we have staples. That is the tilt here to the upside, holding on to mildly green numbers over the past 5 days of trading. When we look at some of the major markets, we got volatility blowing out here to the upside, 29% rally off of those lows. Now, of course, the VIX is coming off of lower numbers, so percentage moves are always kind of big in their magnitude, but still there's fear out there, volatility getting a bid, followed by bonds. So safety haven sort of assets here, TLT, IEF. And on the downside, we have China, emerging markets, and natural gas. So let's jump into the charts here. Let's try and make sense of this week's action. There was a lot to go on, lot going on. Market had the Fed to digest, and that certainly stirred up a little bit of volatility amongst probably 400 other unknown reasons. But really, when we look here at the S&P 500, this is the weekly time frame. This is the cash market for the S&P 500. And after everything was said and done, we closed down 0.63%. We had a pretty classic outside reversal week. So that means we attempted to push higher. We attempted to continue higher in this trend. Those highs ultimately failed, and we closed the week down near the lows of the trading week. So all in all, when we look here at structure in the weekly time frame, not a whole lot changed. Really, we have this outside reversal week, which is the potential to see more follow through and some potential rollover here, but it's just potential at this point. 2800, that's been the kind of hallmark line in the sand that we've been using now for a while, and we're just essentially seeing more of the same right now, and that is volatility around 2800. One of the things that you like to see, or you always want to see in an ideal situation, is that when a market's in an uptrend and you're trying to break through and you're measuring the strength and you're trying to break through past resistance or past overhead supply, what you typically like to see is that the market start to reduce volatility and get closes above the technical level that you're interested in. So in this case, 2800. The ideal scenario is that you see volatility compression, you see price acceptance, and you see us continue to close and hold above 2800. That is arguably, we are still right at 2800, but we're seeing some volatility expansion here when we go on the daily time frame. So that's not the ideal check mark box that you'd want to see here. It's not the end of the world. It does not mean we have to roll over hard. This is where I think time frame is very, very important, is you need to know sort of where you live as a trader and how you're approaching this market. From a weekly structure position here, or picture here, I don't see much change. I don't see that much has changed here on the weekly time frame. We're still right at this 2800 level. If we see a sharp follow through next week, certainly will change my tune. But to me, we're still holding above these key trend levels as of right now. MACD is still inching towards higher territory right now, so we still have some pent-up momentum here. And at the end of the day, we're only down 0.63%. So that is the encouraging part of sort of the narrative of this week. If we go down to the daily chart, you can kind of slice this a little more pessimistic, where you had this abrupt rug pull on Friday. You had a gap down after a strong session on Thursday, following Fed. So you had a nice strong breakout session to new closing highs. Then you saw a gap down, and the highs of the day was essentially the open, and we sold off all day and closed near the lows. So again, that volatility expansion taking place at a key technical level, that is what you want to be careful of. We're still holding above that level as of right now. We're closing right above it or at it. So it's really going to be on next week to see if this market gets follow through to the downside. That's going to be key here. We definitely had a nice shakeout here. We've definitely stirred the pot with this week's Thursday, Friday action. Now we just need to see if there's actually commitment to this move lower. Are we going to get follow through, which is something that's been hard to find in this market on the downside all year. You know, really this week right here, when we had this 4 or 5 days worth of selling back in late February, early March, that was, you know, really the most kind of pressure we've seen all year. And now we're looking to see if this day is followed up by some more pressure. So when I zoom out here and I look at just the S&P 500 daily time frame, 2800, it's where we closed. That's a good reference point for me and what I'll be using to just kind of gauge very short term kind of sentiment and who's in control there in the very near term. And then I'm looking at about that 2740 to 2730, which is actually close, I guess closer to 2722 is to be exact, was Friday, the March 8th's lows. That's going to be, you know, the next sort of line in the sand there. If we start closing below 2800, I'm going to look at support at, or at least reference point of 2728 to 2740, this zone right in here, which was the lows from just a couple of weeks ago. So those are the nearby reference points I'm paying attention to. Otherwise, on the upside, we have, you know, Thursday's highs, and then we have that 2872 level, which is the breakdown level back from October of 2018. So that really is, you know, kind of how I'm looking at this. Definitely a loud day out there. I feel like there was a lot of chatter, a lot of sort of noise out there with Friday's reversal and sell-off day. Maybe it's warranted. Maybe we get follow through. Maybe this is the inflection point. But for me, you know, I still see this as an uptrend here that is trying to hold on. So still kind of glass half full, but keeping an open mind. Again, time frame strategy is so important. If you're a short-term trader, you have to protect yourself. If you're longer term, this probably doesn't mean a whole lot to you right now. And that's really what you just need to ask yourself is, what camp do you live in, and how aggressive do you need to adjust based on this action? So that is the read there on the S&P 500. If we look at the VIX, we said we'd look at that real quick. You could see 23% pop here, so back up almost to 17. So almost back to certainly the highest close we've seen in the past couple of months. So really just going back towards the pullback that we saw in that first week of March. So nice pop here, a little bit of fear coming in with the VIX there, and again, we'll see if that can persist heading into next week, and if that continues in its rally. If we look at the IWM, this is undoubtedly the weak spot here in the bull case right now. We're basically making a second leg lower. We had the leg lower, this first leg lower, which started, you know, just a few weeks ago. We never really recovered from it. So the S&P 500, the Qs, they broke out to new highs. When we look at the IWM, this was one of the first to start to weaken up and you know, see about a 5% pullback. It retraced about 50% of that move, and now here it is again, almost, you know, 5% down off of where it rallied to just earlier this week. So the IWM, if we put that back some lines here, is below the pivot from March 8th. That's a reference point for me. If the longer we stay below closing where we are, below this, looks like we'll call it 150, 151, then, you know, there's some near-term caution is advised. And then if we start to look at levels below here, we got 147 and change and 143 and change right here. Just some prior consolidations where the market has sold off to and found support previously. So the Russell on heavy volume, gap and slide on Friday, absolutely the most pessimistic, piece of evidence here in the bear case. And this has, to the bears' credit, this has been the leader on these moves, kind of foretelling what is going to happen with the rest of the market. And right now, the IWM seems spot on, and it's leading to the downside here. So again, short term, nothing looks too good here in the IWM. What the bulls' best case scenario would just be a quick snapback reversal next week. Call this a short-term capitulation, ran the stops, got people short over the weekend, flushed out positions into the weekend, and then if we can reverse strong on Monday, then, again, that's a whole new signal and a different ball game if that actually pans out. It's just a scenario. It's certainly not a prediction. If we go to the Qs here, this is the bright spot of the market, because if we look at the weekly time frame, this actually managed to hold positive on the week, just barely. It still had a pretty pronounced outside reversal week, but again, with all of the chatter, anxiety, and this is the top it's in that I kind of see out there from a sentiment standpoint, the Qs are still positive, and we're still kind of holding up above most of its trend here, and it's had a pretty strong run over the past 2 weeks. So again, nothing to like here in the short term in any of the markets. It just depends on your context and how aggressive you want to be looking at these smaller time frames. Follow through next week, I think, is going to be basically key right across the board. So that, I think, covers everything I wanted to say about the major markets. Let's go into some other of major markets. TLT this here, quite the move this week. This is a very important move to take notice, because this is the highest point we've seen now, TLT rallying back above, at this point, multi-year support. This 122.50, 123 has been the lid on TLT here for all of 2018, and we're finally launching above it, an aggressive move, expansion in range higher as the MACD pushes into positive territory. Volume not as heavy as some of these past weeks, which is interesting, but still a nice price structural breakout here for TLT above a significant point. This was enough of a reason for us to get involved in this for a trade. We bought after Wednesday's action, so Thursday morning, I believe, was the entry. Thursday morning, yes, that was the entry, and we're playing it via the TMF, so not exactly TLT, but we have a position here, long bonds, and we are currently long, looking for higher prices. Of course, nothing goes up in a straight line. It had a pretty big move here for TLT over the past 3 days, so a little bit of settling in wouldn't be unreasonable, but I like the price structure breakout here for TLT. We talked about this pattern at great length over the past many market recap videos as it consolidated in here. We were talking about just watching for the possible breakout of either sort of side here, ideally the upside, and we did get that this week. So TLT, nice move there. Part safety haven trade, perhaps, as equity started to retrace here on Friday. Maybe some from Fed speak too, but again, price structure looks good there to the upside. Tough to chase it at this point. If we go to some of the other major markets, we'll go to USO. This ended up finishing positive here on the week, but just slightly so. Pretty much like equities, it did have kind of an outside reversal week. It tried to push up and kind of close closer to the lows here. It's still holding up in the short-term trend, so really not a lot has changed here. Bulls still kind of in control in the short term. If we look at natural gas, this is potentially rolling over here. Had a tough Friday as well, going back to this support area where buyers have been stepping in right around this 24.40 area. It's trying to hold on with dear life right now. It's been mostly moving sideways, so waiting to see if this actually does kick the can and roll back over, or if this is where buyers do their last stand of a support, and then we can springboard from here. We'll pay attention next week for that result. Last but not least, we have metals. GLD on the week here was up 0.81%, continuing to grind higher here. The lows starting to put some distance in between the lows from a couple of weeks ago around 121 and change, and where price is currently trading now. It did break trend about almost a month ago at this point, and it's trying to sort of get back up to those levels for GLD. So short term, bulls still picking this up and trying to put in that higher low, and silver kind of in the same spot here. Did close up 0.84%, still trying to put some distance in between its recent lows and where it's trading, trying to get back up to where it broke down from trend just about a month ago. So those are all of the majors. Let's take a look at some of the sectors, the individual sectors that drove the action this week. We got the top three and bottom three that we like to look at. So number one top performer this week was consumer discretionary, and you can see here this is kind of bumping right into resistance and stalled out here. You have to go all the way back to 2018 to see where some of that price memory was, and you can see this nice little consolidation that took place really throughout June, July, August of 2018 is where price rallied into, and then it kind of pulled back and again had that rug pull on Friday. It did still close again up 1% on the week, so it did make forward progress. Did see some good volume coming in recently, but this looks like in the short term that there's some weakness to come in here, and again we'll see if there's any follow through there. Staples number two, this was positive here on the week, continues to basically grind higher here, going back into some of the November fourth quarter supply areas in here. It's a little bit messy, but this trend is continuing higher, MACD in positive territory, so it continues to work. XLU also working, trading much closer or pretty much at closing at all-time highs here for XLU. Still very much in positive territory. There's no overhead supply here, so utility staples looking pretty good here on the week, as you would expect in sort of a market pullback sort of environment. IBB, this is on the downside now, worst performer this week. Take a look at the volume coming in, and we had some, we had Biogen that reported this, or didn't report, but had its, I think, discontinuation of one of its drugs there that it was highly looked upon, minus 30%. I didn't look too much into any of the stories here, so feel free to add in what the actual news catalyst was. But certainly, this is a big market cap name for biotech, and this is certainly weighing on the IBB when a stock like that is getting hit as hard as it did, shedding billions of market cap. IBB coming back into support here. It's going to be the second time testing this in recent memory here, so it'll be interesting to see if the bulls can continue to hold on to this 107 level. That's been support. Look at the volume coming in here, so got to be careful trying to just blindly buy this dip, but so far the dip buying has worked around that level in IBB. We'll see if it does this time around. Financials, second worst performer this week, also heavy volume as this sells off here and as it kind of pushes down from this $27 resistance. It tried to reclaim some of this prior old support, and then resistance and support, then was resistance, and then it got a nice thrust off of there again this week. So the weekly chart of this, again, you can see pretty loud, high ranged week here as the MACD attempts to go back into negative territory. So bulls are going to want to step in here sooner rather than later to prevent a bigger pullback in financials. Last but not least is materials. This was the third worst performer this week. You can see here this is really going or really behaving cleanly from a technical perspective. $56 has been resistance here. It was the bottom end of a range in 2018. It's where we rallied to back in November of 2018, and it's where we're stalling out right now. So technicals really kind of playing the model example here, and we're getting that thrust off of resistance. So once again, we'll look for follow through, see if buyers can step in and save this. MACD is still in positive territory. We'll see if that can sit into next week. So that is the market recap. Lots going on this week. Hopefully you guys were okay, managed to take advantage of the volatility rather than be taken advantage of by the volatility. There's always a place to be, ideally. So thanks so much, as always, for watching. You can subscribe on our YouTube channel every Tuesday and Friday doing market recap videos just like this, or you can follow us on the Trade Risk, traderisk.com/blog. Have a great weekend, and we'll talk to everyone next week.